selling off again here into the close, looking at another down week for the markets. The Dow is down about 291 points, so we are off the lows. But Lindsay, all the swings of uncertainty in the market around Russia, Ukraine, some of these commodity prices like aluminum and copper and wheat and corn continue to surge. What's spooking investors based on the clients you're talking to?
Yeah, I mean, it's an extremely uncertain environment, so it's been incredibly difficult to figure out how to invest in this type of environment. And as we talked about in the past, I've been leaning more defensive since the beginning of the year because there's just been a significant amount of uncertainty. This conflict in Eastern Europe obviously is dominating the minds of investors at this point in time. It seems like a sell now, think later type of atmosphere, at least this week. Things change every day. You look at the market, it's moved up or down in a 1% range, more than 50% of days so far this year. So it can be a very nerve-wracking environment to invest in. And then you look at oil prices, you have to wonder how that's going to impact growth going forward. The Fed, they seem to be taking a more cautious tone, but how long will that last if we get past this? There's just so many uncertainties. We don't know where inflation is going. And so it all comes down to being in a wait-and-see kind of mode, really positioning your portfolio to have some defensive exposure to get you through this and just knowing that we will get through it eventually.
Yeah, Lindsay, and to that point, I mean, obviously being defensive has been the right call. 2 months ago yesterday was the peak in the market, and it really has been pretty much sellers in control of all the cyclical and riskier groups. However, what would you be looking for in terms of not so much an all clear, but a signal that, in fact, it was no longer time to be getting incrementally defensive? You have investor sentiment looking pretty depressed. Obviously, we all know, as you said, these things pass. External events tend not to be what kills bull markets. So what would you be looking for as a clue?
Yeah, you know, I think there's a lot of different things we can look at, but I think the fact of the matter is it's going to be a rocky road for the next several months. Even if we get past this conflict between Russia and the Ukraine, obviously that's the biggest weight that needs to be lifted first and foremost. But then we turn to the Fed, right? And the Fed's really going to be driven by what inflation is doing. And what we know now is that inflation is likely to remain higher and stick around for longer than what we had initially anticipated. So we're going to want to see a softening inflation or moderating in inflation so that we get a better understanding of what the Fed's going to do. And while the Fed, like I said, they've become more cautious. We heard that this week. They're going to be a little slower with their rate hikes, but we really need to assess where they're going in the future. And don't forget, we have midterms later this year, too. So that usually lends to, again, an underperforming market into that event. So it's going to be rough.
We are getting, on that topic, Secretary Janet Yellen, the Treasury Secretary, on the wires right now. She's speaking at a Stanford Institute of Economics event. Sounds like she's taking questions. There's a headline that says, "I believe the Fed can bring down inflation without recession," which she's
always
got credibility.
The goal, always
she
the
was
premise.
The Fed chair herself. Yeah, that's the goal.
Exactly.
And then to hear her say it may be reassuring, although the Biden administration has to bank on that, too.
Right. And hopefully we're talking about just statistical effects helping out in that project of reducing inflation, too. Bank of America, meanwhile, taking a look under the hood at the wild swings we've seen in markets amid investor fears about the Russia-Ukraine conflict. The firm finds that 2022 has been the strongest start to the year for commodity prices since 1915 as the price of energy, grains, and metals surged. WTI oil on track to finish the week up more than 26%, trading at levels not seen since 2008. Now, B of A also found investors selling has set some records. Last week saw the biggest outflows ever from European equities and the financial sector. The Euro Stoxx 600 finished this week down 7% for its worst week since the March 2020. And the financial sector is the worst performing S&P sector this week, down 6%. So, I mean, Lindsay, on one hand, this seems like kind of straight typical performance chasing in terms of the flows. What would you like to see from investor behavior before you sort of have a sense that the market is about to stabilize?
Well, I think what their report also showed is that investors aren't really just jumping out and exiting. What they're doing is they're rotating. So they're rotating from Europe to the U.S. They're rotating from cyclicals to big cap defensive type names. And so that's a positive sign. But what we're going to need to see is that re-rotation back into the more growthy, riskier areas of the market to show that maybe it's the risk on mode is back in play. What I thought was also interesting was the financials outflows. It seems like they're getting thrown out with throwing the baby out with the bathwater, right? Look at J.P. Morgan, Bank of America today. These companies are acting as if there's significant contagion from the Russian and European situation right now. So I think it's really, really, it's an interesting market that's creating, in my opinion, a lot of different great opportunities.